Good morning, all. We're here to talk about a Delta stock. Just reported earnings this morning. I think it's one that's obviously pretty worthwhile to look at because undeniably, definitely the worst possible year for companies of this aspect at all. We're talking about half the year they couldn't do business at all, and right now they're giving away flights dirt cheap at a massive loss. So it's definitely been the worst year that you could imagine for companies like this, cruise lines, and things of that sort. The companies that aren't very diverse and really have one avenue of revenue have been absolutely devastated. So we're going to look at these earnings. The stock is up as a result. It is wild to think too. I mean, if you look a year out, the stock's definitely down, right around 32%. It's not horrible. It's actually, since its dip, up 93% from its dip in March, which seems kind of wild. The recovery seems a little wild, but again, if you look off of a 5-year scale, it's still in the doldrums. There's no doubt about it. So you need to consider that. Let's take a look though. So Delta Airlines, here posting a Q4 non-GAAP EPS of negative $2.53, which is a miss by 8 cents, and a GAAP EPS of negative $1.19, which is a beat by $1.06. So there is some positive news there. Again, it's a massive loss. A company like this typically doesn't face that, but it's been several quarters of massive losses. The main concern here. Revenue of $3.97 billion is down 65% year over year. Still beat by $380 million, but again, that's what I'm saying. All flights pretty much that you can find are at least half price minimum, and most people just aren't doing business with them. So that's why you see revenue dip so significantly. Load factor was 42% versus a consensus of 49.2%, and available seat miles were at 36.57 billion versus a consensus of 33.45. So a lot of available seat miles, meaning people weren't getting on those flights. They just weren't. Crazy stuff. I mean, overall, you see adjusted revenue fell 69%, and capacity was down 44%. That's good neck crack there. Investors more focused on looking ahead, obviously, which is why it's up. They guide for revenue to be down 60 to 65% for Q1. I don't know how that's exciting for any investors. And capacity to be down 35%. Operating expenses to be 35 to 40% lower, which makes sense. Less staff, obviously a lot less in terms of operating expenses. They're running less flights. And they're expecting a daily cash burn rate of $10 to $15 million they're losing every single day. Holy freak. That's cash they're spending every single day, 10 to 15 million. I don't know what excites investors. Maybe they're looking further ahead, which is simply just comments from their CEO here, which I don't know necessarily what, they're selling the stock, so they're not necessarily going to give you the 100% honest picture. They're saying we see 3 distinct phases. The early part of the year will be characterized by choppy demand recovery, probably not recovery at all, and a booking curve that remains compressed. Probably not much of a curve, probably a flat line, followed by an inflection point, and finally sustained demand recovery and customer confidence gains momentum. Vaccinations become widespread and offices reopen. For each phase, Delta has the levers to pull, successfully react to the emerging demand environment, including tightly matching our sellable capacity to expected demand. Now, this is again just selling the stock. I don't get it. I don't think that does much for me because there's no proof in any of that. There really isn't, and just the cash burn aspect of it's a scary thing. I mean, you don't like to see that, and who's to say when the recovery necessarily comes for this company? That's the concern there, and they can say what they want. 3 distinct phases, but when do they start? I mean, I've heard some estimates that we may not return, to where a majority of people are vaccinated until July. July at the earliest, supposedly. Well, everyone, meaning people who are going to get it. Not everyone's going to get it. And from there, what does that mean? Because if you're taking a flight out of the country, are they going to allow you to? Because not, probably by that point, I doubt everywhere you're going in the country or out of the country probably hasn't had it. That's the question that I have in this aspect. So that's kind of my concern. So that's something just to ponder. But airline stocks as a whole, that's right, are up after this report. I don't necessarily know why, but I guess because it's halved its cash burn from $24 million per day in the last quarter. Now, $12 million. I don't get it. Expects positive cash flow sometime in the spring. I don't necessarily see it, but it's good. It's good estimates for them. We look at the earnings release. Let's take a look at these. This press release here. Pre-tax loss of $1.1 billion. Yikes. An adjusted loss of $2.1 billion. So again, let's be fair. We look at the GAAP one. I typically look at GAAP numbers. $1.1 billion lost in a quarter it's a scary number, especially when you're talking about revenue of only $4 billion. It's scary. You don't like to see it, but again, there's some positivity in the direction that it's going. It's still rough. And again, as I mentioned, this CEO says it's the toughest year in Delta's history. There's no shocker in that at all. So let's see if we look at some good stuff. Operating expenses of $930 has decreased $5.2 billion over prior year period. Again, that makes a lot of sense. You talk about the decrease in staffing; they've laid off a lot of people. We also see significantly less flights, which means significantly less fuel cost, which it's just everything adds up. So don't necessarily think of that as a positive thing. It's just kind of natural with the business. Again, we saw the outlook here. Not good. You just, I don't know. I don't know necessarily what to expect out of this. But it's not that exciting. What I think is really the most important thing is I'm probably just going to look at the balance sheet. They have highlights here, and I don't think there's necessarily anything to highlight. I don't know. That's just me personally. This is a stock that I think we're not necessarily going to look at what they're going to sell as the positive points. There's not many positive points, but you need to look at this balance sheet to necessarily see what this company's doing. Get out of the statement of cash flows. We don't like that. We kind of do, but we also like the balance sheet, baby. So they do give me a full year comparison, which is going to be fun. It's going to be fun, I can tell you that, because this is pre-pandemic compared to where we're at now. Total current assets on this company sitting at $17.4 billion. They've increased their cash position quite a lot in short-term investments because they need that ability to use it with a significant amount of cash burn. That compares to 8.2 of a year ago. Total assets in general are sitting at $72.05 billion, compares to a year ago 64.5. So not bad. I mean, you see improvements there, and a lot of that comes in the current assets category. Really, all of that is where you saw that improvement, just because they're hoarding a little bit of cash. Likely means they increase debt, but we'll take a look. Current liabilities only sitting at 15.9 compared to 20.2. That's pretty exciting, but here's where we get a little bit of an issue. Total non-current liabilities, fudge, at $54 billion, $54.7 billion, compared to 28.9. And we're talking about another quarter of cash burn of $12 million a year, or $12 million a day. it leaves the stockholder equity at 1.3 billion, compares to 15.3 billion a year ago. It's not unexpected for what they've gone through, but you need to realize that this means this is going to turn into a stockholder deficit next quarter. There's no doubt about it. You're going to see this balance sheet turn negative next quarter, and there's really nothing they can do to avoid it. So you definitely consider that. Now, there's no way to avoid it. This is going to be a company with a negative balance sheet, stockholder deficit. So you need to consider that if that's something that you find worth investing. It's really tough to say. You look at the balance. Valuation on the stock. $26.52 billion in terms of a market cap. And you look at the annualized revenue for this year, which for the full year they had, which we'll look at obviously. I'll look at the GAAP version, $17.1 billion, trading in a market cap of 26.5 isn't that bad. But then you consider the other factors. You consider the fact that it's an unknown when the recovery happens. It's fair to say it's probably this year, right? But it's unknown whether Delta feels that or what the prices look like for them in terms of tickets. There's a lot of unknowns with this company, and that's why I think this one necessarily isn't a surefire buy at these valuations. I like the company. I really do. I think they're not going bankrupt by any means, I don't think, but I think it was a better purchase back in March, and I think this recent run-up hasn't been quite necessarily fair. I think it's just an overall, in general, the market was going up, and they caught a little bit of a benefit from that, so they've had a good recovery. I think there's a chance they get hammered yet again if we find any sort of economic downturn again. In this first quarter, these are the kind of stocks that are going to get hit the most. So you need to consider that, and if you're going to purchase this and if you're on the fence, I would personally wait on the sidelines for now, because I think that you may have a better buying opportunity in the future. That's my opinion on the matter. Overall, again, stock's up 3% today. I just don't necessarily get that, but you have a great day, and that's what I got for you.